Let's dive a little bit deeper into the action with our markets reporters from equities, bonds, currencies to commodities. Mike, what are you watching?
Well, Romaine, the VIX has clearly shot up a little bit in the last few days. It was trading below 12 before Thanksgiving. Today, it's up to about 16. And obviously, anytime the VIX has risen this year, it's been sort of corresponding to trade tensions ratcheting up. What's interesting is that the moves in the VIX have often been echoed by risk reversals on the Korean won. And that's basically the option skew or the spread in implied volatility between puts and calls on that currency. This week is different, though, in that those risk reversals have not really mirrored the move higher in the VIX. As you can see in this white chart there, the white is the VIX. It's popping up in those risk reversals on the won, not really moving in lockstep with the VIX. Now, this was pointed out in a note by volatility specialist Michael Purves, the CEO of Tall Back and Capital Advisors. And Abigail, his interpretation is basically that this suggests the pain pivot is increasingly moving to the U.S. side of the trade war, Abigail.
Well, Mike, we are just 2 days into the month of December on a trading basis, and we're already looking at 2 down days. Everybody wondering what this December might bring. Here's the S&P 500 on the year, up 23% in 2019, on pace for the best year since 2013. Of course, raising the question of whether or not too far, too fast. Now, within the uptrend, we do see some trade war-related dents back in May and then in August, along with late September into early October. Each, though, is smaller than the last. The current one is barely showing at all. And when we take a look at what history suggests relative to December's, going back 30 years, what we're looking at here in yellow for the S&P 500, the gain for the rest of the year outside of December, the other 11 months, up about 0.5%, a little bit more than 0.5%. For the month of December, up more than 1%. So history suggests, Taylor, that the S&P 500 may just be fine this month. But what we really see here is if you are going to be in stocks in the month of December, small cap really outperforming, up more than 2% on average in December over the last 30 years, Taylor.
Well, Abigail, I'm going to take what you were talking about then and fold it back into the fundamentals of earnings season. And if you come, there's some good news and some bad news. Come and take a look at a chart here that I'm showing inside my terminal where we are for 2019 in white. That's near the bottom of your screen. Looks like we're going back to earnings revisions heading lower. That's very different from the last 2 years in blue and yellow when we started to see earnings revisions move upwards. That was, of course, in part because of tax reform. So this line here in white looks like it's going back to the mean of where we were before tax reform, when we started to see some earnings revisions head lower. If there is any good news, it is that our BI analysts are forecasting earnings per share growth year over year in 2020 as much as 4 to 13% per quarter next year, in part given because of these low comps in 2019.